And there's my debt, $4,020,000. It's all 5 mortgages, 30-year fixed between 2.875 and 3.625%.
I mean, if you're willing to let that kind of money just evaporate, I personally don't do anything.
All right, everyone. Welcome back to another video. Let's talk about Graham Stefan. If you want more Graham Stefan content or just finance content in general, be sure to smash that like button, because today we're going to be revealing how Graham Stefan actually spends his net worth, what his net worth actually is, and what he does in general. So he did not earn his money only by saving coffee. Now, he started at 19 with real estate and he went hard at it. And this is a story of upbringing. This is a story of saving money. And that's why I love Graham Stefan. Today, he's worth at least 20 to 30 million, which is a very, very impressive number in today's age. Personally, I think this number is extremely high and a lot of people couldn't spend that cash. So Graham Stefan does what he does best: reinvests his money instead of spending it all. So there's two types of people in the world: those who save and retire early, and those who spend it all and get up owned with nothing. Now, this is a truly success story. Graham Stefan was born in Santa Monica, California, and he became a millionaire at 26 years old. Now, he started out as a real estate agent, and that didn't really stop him on working. The real thing I like about Graham Stefan is his persistence, his stocks. All of the things he's doing right now is really strong. So let's break down what exactly his net worth is, what is he holding, and what exactly is the money in.
Diversifying into stocks. The majority of it is 80% S&P 500, 20% international. And then I do have some individual stocks, and those are the 5 largest holdings.
We tell folks not to have more than 1% of your net worth in single stocks, because a lot of people get to playing single stocks and lose their butt. The numbers out there on the individual buying and selling single stocks to build wealth are horrendously bad. They're really bad. I don't buy any single stocks because I don't track it. I don't want to spend the time on fooling with them. I would become obsessed with it. It would drive me nuts. But you know, you got a small percentage of your total net worth in this, and as long as it doesn't take up a large percentage of your time for that small percentage of your net worth to screw with those singles, then they're fine.
So let's start in stocks. Now, stocks are very volatile, but he's keeping it about 50-50. 50% individual stocks and 50% individual funds. So the ETFs, or index funds, which people are saying are most perfect, they definitely are. On the 10 to 15 year ratio, they're gonna give you about 7 to 8% per year based on historically. But the really important thing is Graham Stefan also has 7.2 million in real estate. Now, he sat down with Dave Ramsey and he went through on his portfolio itself. Something that interested me is Graham Stefan also owns some crypto, but this crypto is a very small amount, about 450K, and Dave Ramsey told him, well, if you want to lose this money, if you're mentally prepared to never see it again, that's fine, you can keep it. He also pretty much likes cars and also keeps a car in a garage. I also made another video on Graham Stefan. You can check out on my channel if you want to subscribe.
Below my cost basis now. So I have more invested overall than it's worth.
Yeah. But your basis really doesn't matter. What matters is the future. Harvard Investment Newsletter did a thing called sunk cost analysis. The class was taught to yell if someone brought up their basis: sunk cost. Sunk costs don't matter. I mean, if you're willing to let that kind of money just evaporate and just disappear, and you can emotionally accept that, and your portfolio can accept that blow, and you want to screw with it, that's fine. I personally don't do anything like that.
But the real important to me is the angel investments. Now, the important factor here is, do we even consider this a net worth? Because angel investments aren't really a thing you can always liquidate. They aren't like, oh, like money in the bank. You cannot just sell them all off. Maybe there's a company valuation at $5 million. Personally, I think his real estate gives him enough to last a lifetime, which is over $7 million and will probably be $10 million in the future. His stocks also, if he needs to liquidate that, he can retire early. He's set for life. And the more money you earn, the more you start to realize you need less and less of these things. Of course, exotic cars aren't always an investment. Usually they're a liability, they have insurance, they have all sorts of things. But at his net worth, he doesn't have to think, am I gonna pay, $700 or $200 extra for his car, because his YouTube channel covers for it.
I put almost $1 million down on that just so I could have a low payment. But the loan I got was 2.875, 30-year fixed.
You should do like a YouTube channel on this. You're kind of good at this.
I should. And then after staying there for a year, I bought this place in Las Vegas. And this is where I live now. So basically the left half of the house is all studio, and then, the right half is all the living space.
That's cool.
This is what I've really been working on for the last 2 years is...
If his crypto crashes to zero overnight, this wouldn't really matter, since he still has stocks, he still has real estate, he still has angel investments, and in the worst case scenario, he could liquidate his exotic cars, which are worth $645,000 at the time of making this video. So he just keeps a small amount in crypto. He can liquidate that if he wants, or if crypto in some black swan event crashes to zero, there's no worries in that. He still is diversified. This is a very important factor Graham Stefan does. He made his money on YouTube, but he also made his money before by being a real estate agent.
They're spread throughout 6 fintech companies that I've been building out for the last 2 years. I'm not counting it in my net worth, but if I were to put a value on it today in terms of what someone might offer for it, I just threw that number there.
Yeah, this is, it's icing, it's play money.
Sure.
It's gravy on the biscuit, so cool, okay.
So this is something that I've actually gotten really into because I love cars and watches. And my philosophy is that if you buy the right car at the right...
Now this is the moment you guys have been waiting for. How Graham Stefan invests. Graham has amassed in millions by investing according to 2 core principles: diversification and opportunity cost. His current asset allocation is 35% equities, 35% real estate, 22% treasuries, 4% alternative assets, 3% in Bitcoin and Ethereum, and 1% in other assets, which could be Pokemon cards, it could be coffee, it could be his brand, it could be anything. To further diversify, he also invests small amounts in exotic cars and follows a buy and hold strategy to reduce the impact of market volatility. Now, there's a very important tweet he made a few months ago.
Price, you should be able to drive and enjoy it for free. So these 3 cars for me, the Ford GT was something that I saw as a great value about a year and a half ago, so I paid $300 for it. And that Ford GT, by the way, has been the best investment that I've made over the last probably year and a half, 2 years. A Tesla Roadster was the other one.
Yeah, I think your watch is worth more than you think it is.
And there's my debt, $4,020,000. It's all 5 mortgages, 30-year fixed between 2.875 and 3.625%.
I personally hold most of my money in US equities, but have 20% in international funds and another 20% in treasuries, which basically means he's very bullish on US performing well. To further explain what this exactly means, he's thinking, or he's investing, he's putting his money on the US being worth a lot more in the next 10 years, on the companies working in the US being worth a lot more. So this gave me a ton of diversification, some risk, and a lot of stability while maximizing his returns. Now, recently I talked about a video how he bought his own property in Las Vegas, and he's earning about $8,500 per month each single month from his properties alone. So he's making over $100K a year. And the real estate business has attracted the gamut of investors in the recent years. We saw what happened, but his properties kept rising in value even with tenants. I'm not sure if he's actually maintaining these properties, if he's having an agency for that. There's tons of options over there once you have enough cash. Now, the most important thing is his 5.2 million stock portfolio, 80% which is in S&P 500. Something you should note, most of you guys shouldn't keep all your money in one basket, but with S&P 500 is you keep it diversified through all these important companies, and over 97% of the time in 10 years you will be profitable. In 5 years you will be profitable 73% of the time if you are investing in stocks, which is a very important factor. I think a lot of people are trying to buy a GME, they're trying to buy all sorts of things, but it never works out. So he's really, really frugal about this, and he's thinking long term. He's saying, okay, I'm not gonna have this car right now, but I can afford it if I keep investing in 10 years. So he's using delayed gratification. If you guys want more content like this, what do you guys think about Graham Stefan? Hopefully you enjoyed this video because I put a lot of effort into it. And if you guys want more content like this, be sure to smash that like button. Peace, everyone.